Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner has the week off. It's a busy start to the month of September in the Pac Rim. World leaders have converged on Tianjin, China for the Shanghai Cooperation Organization summit. On Sunday, Indian Prime Minister Narendra Modi met with Chinese President Xi Jinping as the two nations look to restore economic ties. Bloomberg's North Asia correspondent Stephen Engle is at the summit.
It's been around since 2001, but hasn't really gained a lot of global prominence yet. But this is going to be the biggest one to date, with more than 20 world leaders. Actually, in fact, you're going to have the leaders of China, India, Russia, Iran, Pakistan, among others, all on the same stage for the first time in many years. So there is some growing clout, of course, amid the ongoing trade friction coming from Washington. And I think, the China-Russia dynamic is going to build upon strength. The no-limits partnership between Xi and Putin is going to be there. Whether we're going to get any oil deals or energy deals announced, it's yet to be seen. This might not be a real newsworthy event. It's more about China sort of courting India. India is the big fish to catch right now because they're long time known for strategic autonomy. They don't really have any defense treaties signed with anybody. Yes, they're part of the Quad, along with the United States, Australia, and Japan. They're also part of BRICS and then SCO, but they don't have any security alliance inked. They like that strategic ambiguity or strategic autonomy. So that's why the full court press, if you will, the courting of Modi here is ongoing. And already Narendra Modi has announced that they're going to resume flights between the two countries, between China and India, that have been suspended since the pandemic and never resumed because of border clashes back in 2020.
Bloomberg's Stephen Engle reporting from Tianjin. Coming up, we'll bring you more on the potential economic impact of this week's summit. But we begin in Indonesia. President Prabowo Subianto is calling for calm following violent demonstrations over the weekend. Protests in the country turned deadly after a police vehicle ran over a 21-year-old food courier in Jakarta. For more, we heard from Bloomberg's Faris Mokhtar in the Indonesian capital. He spoke with Bloomberg's Shery and Avril on the Asia trade.
Faris, talk us through what triggered the protests. What are the people demanding?
Yes, Avril. So, as you pointed out, the flashpoint was really the perks for the lawmakers in parliament. And the people at this juncture are seeing economic slowdown, weakening consumption. And on top of that, they are viewing the lawmakers as rubbing salt on their wounds by demanding for, higher allowances, for example, more housing allowance. And these, frustrations have actually built up over the past few months as Indonesia see layoffs after layoffs, factories closing down because of, the domestic slowdown in that sense. And the requests by the lawmakers are seen as excessive and seen as, the political elites being out of touch with the ground.
The president has been in power for less than a year. So what is he trying to do in order to try to appease the public?
So the political parties met last evening, and the president delivered a statement saying that, they're scrapping those perks, that parliament needs to be more in touch, with people's sentiments. Some are actually saying that, this, the statement, the intervention should have made earlier, before the fatalities happened to calm the ground. And as you pointed out, Shery, since President Prabowo took over, it has been a tumultuous, reign for him. There were massive protests earlier in February. The stocks and markets plunged in March because of, concerns over his expensive policies. So right now, for the government, the focus is to calm sentiments. Companies are already instituting work from home policies, out of precautionary measures that, protests could occur today and the ensuing days.
Faris, how much worse might it get for the president? What is the way forward now for him and his government?
Right now, the protest, what is actually sending to the lawmakers and to the government is that, the people are actually, really fed up with the economic situation. there is no stable salaries for them. It is hard to find a job. It is really a wake-up call for the political elites that the people will be watching and scrutinizing their every move. And that, should another display of excessive lifestyle by the politicians would trigger similar protests. Right now, the focus is really to calm the situation. The president has already said that, authorities would take firmer action should there be more, anarchy on the streets. But right now, I think it is really trying to reconfigure how to govern Indonesia better and be more in touch with people's sentiments.
We have Indonesia's inflation data later today. The number is supposed to have stabilized for the month of August. What are we seeing in the broader economy and what the central bank can also do for the country?
Yes, so the central bank has constantly been intervening, whether it's because of geopolitical headwinds or is it because of, domestic instability. On a broader scope, what we have been seeing over the last few months is really weakening consumption. And that's pointing to, multiple factors, which is, people not being able to secure jobs. And those people include graduates, in fact. What you're seeing is that, people are not getting stable salaries because of the loss of jobs. And therefore, they can't really contribute much to the economy. And on top of the domestic instability and on top of the lack of clarity in terms of domestic policies, Indonesia has to contend with, the geopolitical headwinds from the tariffs. So it's kind of like a double whammy in that sense for the country. So right now, what the government is trying to do is just digging its heels and executing its policies. But at the same time, you are also seeing flexibility to intervene in the markets when needed and adjusting the policies when needed, which the president has done so far.
Faris, thank you so much. Faris Mokhtar for us, Bloomberg Southeast Asia global business reporter.
Welcome back to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner is off this week. Geopolitics will be one of the key market themes this morning. U.S. President Donald Trump's tariff campaign hit a snag on Friday. That's when a federal court ruled that his global levies were illegally imposed under an emergency law. For now, the duties, though, remain in place, with the administration likely to appeal to the U.S. Supreme Court. Meantime, investors are turning to Asian markets as a safe haven. For more, we heard from Ron Temple, chief market strategist at Lazard. He spoke with Bloomberg's Shery and Avril on the Asia trade.
Ron, I wonder if you could just first weigh in, because we did get numbers out of Japan on capital expenditure. That looked quite strong. We know this tells us about longer term how businesses are planning in the country. What is your sense of the extent in which this solidifies the bet for a BOJ hike in October?
I'm still a bit skeptical that we'll get a rate hike from the BOJ in October. And frankly, I'm skeptical that we would get one even by the end of the year. The markets are saying about an 80% chance of 125 basis point hike by year end. I think given the amount of uncertainty in the global backdrop, though, the BOJ would be well served not to raise rates. We'll have to wait for any additional signals there. Clearly, inflation running well above their target. But I think, again, there are some clear signs, if you look in the data, that inflation will fade as we move through the next year. And so I'm a bit skeptical in terms of that rate hike likelihood.
How do you feel about Japanese stocks, so as a way to position, diversify away from the U.S.?
Yeah, I'm positive on Japanese equities, but I think it's absolutely critical to be actively managing your exposure in Japan. To me, when I look at Japan, this is not a macroeconomic growth story. The structural issues around demographics, around the burden of debt have not really changed. But what I see that's really exciting in Japan is finally we have basically a three-part thesis. Deflation is dead. Number two, corporate governance reforms and changes to the corporate takeover code are forcing companies to basically better manage their capital base and their operations. And number three, we continue to see flows of capital in the household sector out of bank deposits and currency into riskier assets. And so I do think the companies that have basically gotten religion in terms of improving their returns on capital will deliver better returns to shareholders and can basically give you somewhat of an idiosyncratic play in a world where U.S. market gyrations tend to move the rest of the markets to some degree upward or downward.
That's what I was going to ask, is about relative attractiveness, right? So, for example, if you compare it to the United States, we have seen, of course, valuations already pretty stretched, tech rallying, and on top of that, September is supposed to be a weaker month. So does this mean that you would take money a little bit off the table in the U.S. and go elsewhere, including Japan?
Yeah, I mean, I do think, by the way, if you look back over the last 17 or 18 years, literally from late 2007 all the way through the end of 2024, U.S. equities have significantly outperformed almost all major developed and even emerging market equity markets. I think for investors, it's time to reevaluate that asset allocation. You know, the U.S. is 74% of the MSCI World Index, 64% of the All-Country World Index. That is a really high exposure driven in part by those years of outperformance. But in my view, we're at the beginning of the end of American exceptionalism. GDP growth rates are structurally slowing down. Inflation's likely to be higher than most markets for the next 1 to 2 years. And I think there are many other factors that led to the U.S. being seen as the gold standard, you know, from a currency perspective, the reserve currency, treasuries, the safest place to park your money, and equities, a great place to get growth. I think different facets of those arguments are being chiseled away at this point, and the valuation is very stretched. So I think it's a very good time for investors to be looking at non-U.S. markets.
And by non-U.S. markets, would you also lean towards emerging markets? We have seen the longest winning streak on a monthly basis since 2017. But at the same time, how much of that was just China? And would you up your bet on China as well?
My favorite market at this point is emerging markets, and that's on a 5 to 10 year view. We've had, again, that extended period of underperformance in emerging markets. It's always hard to disentangle how much is just driven by China. But when I look at emerging markets, I see growing economies. Yes, there are issues. I mean, what we're seeing recently in Indonesia and Thailand are great reminders that you can have political instability in different countries that can be temporary, can become more extended. But when I look at the broader growth opportunities in these markets, I look at a valuation that is 9 PEs, 9 multiples cheaper than the United States. And by the way, over the next 12 months, where you're likely to get better earnings growth in emerging markets than the U.S., I think this is a story that goes well beyond China and is a very attractive one for investors.
For markets such as South Korea, though, there's still sort of headwinds when it comes to chips. I mean, we're seeing how they're ending up in the crosshairs of the Trump administration with a revoking of some of these waivers. How are you including that in your assessment?
Yeah, I think that's a great point in terms of, you know, in developed markets, many times, well, increasingly it's true of all markets, you're always trying to look as an investor, as an analyst or a portfolio manager. Your goal is to forecast the cash flows of a company, then figure out what the right discount rate is, to figure out what today's fair value is. But when you move into emerging markets, you also tend to have to layer on all kinds of other complexities around issues such as geopolitics, rule of law, government policy changes, et cetera. And so I think it's really critical, regardless of the country you're looking in, that you have a really firm grasp of the fundamentals of each company, understand how macro and geopolitical factors can affect those fundamentals, and put a price on it. And even with all of those kind of headwinds or cross currents, I do think you've still got some exceptionally good opportunities across emerging markets, including some companies within Korea and a broad range of markets in the global EM.
Yeah, we'll be watching SK Hynix and Samsung Electronics, given, of course, those chip news that you guys mentioned. Ron Temple, good to have you with us, Chief Market Strategist at Lazard.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.